You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 18th day of April, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We go live every day at 12 noon Eastern with our public show. Our private live training room is open every trading day from 9:30 a.m. to 11:30 a.m. Eastern. That's for members only and those who are currently taking the free trial. Now, there's two ways to join the show at 12 noon Eastern, the public show. You can, well, your best bet is to go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the question box so that you can ask questions and be a part of the discussion. The way it works is once you go through that 30-second registration process, each day going forward, you'll get an email right before the show starts, and all you have to do is click the link when you're ready to join the show, and it automatically logs you in. You don't have to fill out anything at all. Now, of course, there'll be days when you're out of the office, away from your desktop, and you still want to join the show. Piece of cake. Grab any internet-connected browser and just point it to youtube.com/CFRN. We broadcast the show live every day on our YouTube channel. Not only do we broadcast live each and every day, but we archive every daily show. And currently there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. So with that, let's open with a word of prayer. Let's talk about the miracle catch in Luke chapter 5:1. By the way, I hope you all had a great Easter weekend. Hope you had a chance to spend time with your family. And from Good Friday right through that Saturday that we talked about last week, where the disciples thought they had thrown away the last 3.5 years of their life, the one they believed in, the one they called Messiah, hung on a tree between two thieves and buried, because they didn't understand what was going to happen the following day. But back to the miracle catch in Luke chapter 5. Jesus had been teaching on the shore of the Sea of Galilee and noticed two empty boats. He chose to step into Simon Peter's boat and had him push it out into the water, where he sat and taught a while. When he was done, he turned to Simon in verse 4 and said, "Now go out where it is deeper and let down your nets to catch some fish." After some back and forth, Simon decided to listen to Jesus, and he went. His nets were so full from the amount of fish he caught that they began to tear, and he had to call for help. Simon was so overcome that he fell at Jesus' feet. Jesus said to him, "From now on, you'll be fishing for men." There's so much more we could talk about in this story, but for now, this one thing is what I think God wants you to hear. Jesus didn't allow Simon to stay by the shore or even to simply go out a little way. Jesus told him to go out where it was deeper. This isn't the only place where we see Jesus' disciples in deep water. When Jesus calmed the storm in Matthew 8:23, he and his disciples were going across the lake. And when he walked on water in Matthew 14:22, the disciples were far away from the land. What was the reasoning for sending his disciples into deep water? And how does this relate to us as we grow our relationship with God and begin to share him with others? Here's a couple things to consider. First, deep water requires deep faith. When fishing in shallow water, you can generally see the bottom, but in deep water, you can't see very far below the surface unless you have a powerful light source. If Jesus allowed the disciples to stay close to the shore, they wouldn't need his light to see what was around them or catch the fish he sent for them. The uncertainty that they felt wouldn't exist, and the reliance and faith they had to put in him wouldn't happen because they would be able to see without believing. The number of fish that they caught in deep, dark water could only happen because of a supernatural source drawing them in, and it's the same way today. Also, deep water means facing deep things. Sometimes it takes drowning in our own sorrow and facing really hard things about ourselves to see and feel and realize the depths of the Lord's love and provision for us. When we go out into the deep, Jesus meets us where we are. And we have an obligation to meet others there too. Even when you feel uncomfortable, ill-equipped, maybe even a little hypocritical, Jesus sent the disciples into the deep water so he could show up in an inconvenient, uncomfortable place. Out in the deep is where he met each of them individually. And that's what love is. Showing up in inconvenient, uncomfortable places where Jesus works in miraculous ways when we are willing to let him. And the third thing about deep water is it causes deep fear. In each of the three stories about Jesus' disciples mentioned, deep waters weren't the only thing they had in common. In every one, Jesus had to tell his friends, "Fear not." It's in Luke 5:10, Matthew 8:26, Matthew 14:27. In fact, "fear not" is the most oft repeated phrase in the entire Bible. If we choose to go into the deep places with people, the hard, dark, scary places where we can't see what may happen next and don't know what to expect, we need an anchor to hold us fast. That anchor is Jesus. And he is right here, right now, with all of us who believe. Pray with me. Heavenly Father, thank you for the deep waters of life. Thank you for the opportunity to trust you more, know you more, and see your miracle-working power up close. Help me to shine your light brightly, especially when I may not be able to see what's up ahead. Help me seek you above all else and go forward boldly without fear. And when my flesh and my heart fail, remind me that my strength is found in you alone. In Jesus' name we pray. Amen. And amen. Happy Monday. Hope it's a happy Monday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. We caught that bounce off the 50%. I'm sorry. We fell through the 50% daily fib last night, but the previous bullish cross on the daily chart, which I'll show you in a few minutes, that caught the market and sent us substantially higher. We talk about that almost every day on the show, and we got to see it happen live in real time last night. Currently, the Dow, though, is down 104 points. The NASDAQ is down 90. The S&P 500 is down 15. And the Russell 2000 is down 18. And for the Russell, that's almost 1%. In the commodity basket, crude oil up 86 cents, trading 107.81 last. It's a gain of almost 1%. Gold up $17.40, trading 19.9250 last, gain of almost 1%. And silver up 55 cents, trading 26.25 last, which is a gain of a little over 2%. And when silver moves $1 in price, if you're trading futures, that's worth $5,000 profit or loss, depending upon which side of the trade you're on. That's when silver moves $1 in price, and we have silver up 56 cents today. So if you were trading a futures contract, then that would be a gain or loss of about $2,500, depending upon which side of the trade you're on. In the Asian markets at the close, Nikkei down 293 points, a little over 1%. Shanghai fell 15 points, but the Hang Seng gained 143 points. And in the European markets at the close, FTSE up 35 points, the DAX up 87 points, and the CAC up 47. That gives us a mixed day in Asia, green day in the UK, and it's a big red Radio Monday here in the US of A. Gold hitting its 1-month high on rising inflation and the Ukraine crisis. With that, we'll go to Michael and get a recap of what happened this morning in the live training room. After that, I'll be back. It'll be short today. Today's tax day, and I may even have to put you on hold if my phone rings. So I know a lot of you have lots to do. In fact, I don't think I hear Michael yet. Are you there yet, Michael? He's not there yet. Tax day arrived today with millions of Americans still struggling to get their income tax returns filed. As of April 8th, the Internal Revenue Service had received more than 103 million returns and issued refunds totaling $204 billion to more than 63 million taxpayers. Last year, more than 169 million people filed returns, meaning that at that point, 40% or so still had yet to file. Those rushing to meet the deadline are better off filing an extension, according to Nina Tross of the National Society of Tax Professionals. It has zero effect as long as you don't owe the IRS any money. It's a different story if you do. The IRS is under pressure, too, as it contends with its biggest backlog in history. So with that, Michael, are you ready? Okay, Michael's still not ready. All right, let's go take a look at the daily chart. Also, Valerie has some data problems with some of the exchanges, and so I won't have a Logic 247 recap for you until tomorrow. You know, around the world, in fact, I'll show you right here. Economic calendar, that's what we want. I posted this last night in the discussion group. But for most of the world, it's still Easter. Markets are closed in the UK, Germany, Switzerland, Italy, France, Spain, Australia, Hong Kong, New Zealand, South Africa. There were still some reports that came out of Great Britain today and the US, but nothing high impact. Is that you, Michael?
That is me.
Okay. If you're ready, take it away.
All right. Yeah, I am ready. That's not the right one. Hold on.
And
Here,
after Michael's done, guys, when I come back, we'll go over the concierge trade alerts, and I'll show you on the daily chart where that previous bullish cross served as good support, even though the 50% fib retracement failed us. Okay, Michael, I can see your charts. It's all yours. Take it away.
All right. Here we go. Good afternoon, everyone. Today is Monday, the 18th day of April, 2022. Yeah, happy tax day. And happy Easter. Hopefully all you had a good Easter celebration, the resurrection. Let's see. If you have not taken a free trial with us, go here to eminitrainingschool.com. Scroll down to right here where it says 1 week free trial. Give us your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the link, we don't know that you took the free trial. So you got to make sure you click on that link. All right. All right. So we had a little bit of a different day today. I was kind of prepping people because this week I'm going to be traveling. As a matter of fact, as soon as I'm done here right now, I'm going to be traveling until Thursday night. So I'm going to be doing the room this week from a hotel. So I just did the ES this morning. I mean, I was showing everything else with the crude and the gold, but I wasn't showing everything. I was focusing mainly on one market because I'm going to have limited screen space going up the rest of the week. All right. So I think people kind of got to see more of just one market, and it was a little less trading today because I was just doing the ES. We'll see the rest of the week. You know, I may throw in sporadic trades in the other markets, but I'm going to focus mainly on the ES, I think, this week. That is going to bring my averages down. But that said, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 18th day of April 2022. We didn't trade crude or gold. I did show some trades there, but we didn't do them. We did trade the ES. We picked up 18 ticks on the ES, put us at plus 225 on the morning session. Today it took 33 minutes and 4 trades to get to the goal for the day. That power up $150 a contract, and we took a total of 16 trades this morning. So on the month now, we're at $11,050. That's over 11 trading days, averaging $1,000, $1,004 per contract per 2-hour trading day. We've now gone 135 business days since our last negative day, and we've gotten our goal for the day on 73 out of 73 possible days. So on the year now, we're at $80,958. That's over 73 business days, averaging $1,109 on the year. 1,104 on the month, 1,109 on the year. Now, if you were to quit trading when you got your goal for the day and add one contract per month, right now you'd be trading 4 contracts, and you would have only had to work so far this year 10.56 hours. Today we had to work a whole half hour to get our goal for the day. A whole half hour, 33 minutes to get our goal for the day. And by sticking it out, you know, an extra hour and a half after that, we managed to add on another $75 a contract. Anyway, if you were to do that, you would have had to work 10.56 hours so far this year, and you would have averaged $2,114 per hour. Okay. So let's go through the trades that set up. Now, I'm not going to go through every single trade. I'm just going to go through the highest probability trades that set up, and some of the other trades, I guess, because there weren't that many highest probability trades today. You know, as Dwayne pointed out, most of the markets were closed around the world today. There still was some decent movement, and the markets were still doing pretty well, getting to the numbers that we were pointing out. Trade setups were still there. We still had a long trade here, a long trade here that we didn't do. A short trade in here, another short trade in here, and here that we didn't do. But I was pointing things out on the gold where I thought things were going to go and pull back to and whatnot, and it was doing pretty well. We didn't get very many high probability trades at all today, really. On the gold, I don't know that we had any highest probability trades. We had high probability trades, but not highest probability trades. No, we didn't get a single one. Trade setups are still the same. It was just a little slower today. All right, crude oil, I know we had some of the highest probability trade setups on crude. And second highest probability trade setups, we had a bunch of those. But I was pointing out trades when they were showing up. Here's the highest probability trade setup right here. I showed that in real time as it was happening. Here's one that happened right at the open. Highest probability short right in there. Highest probability long right there. I got in here and really didn't have any good trading in there. There was some trading in here. It wasn't the highest probability trades, but it was up there. Third highest right in here. The white bar on the down close with everything else the right color. There's another one right here, white bar. Let's see, right in here was the highest probability long. It was kind of ugly, it only went a little ways. Then right here we had a string of second highest probability trades. Now I set up the first one as it was happening, but then the other ones happened really fast, and I really didn't have time to talk about them all that much and set them up for everyone. But you can see it went down pretty quick, had some good trades on the way down, turned around and started going back up. Again, I didn't take any of these trades. I was just pointing them out as they were coming. We get here toward the end of the morning session. This was not an actual highest probability trade. It would have been if we had step number 3, but we never got step number 3 in here. So during the break, it looks like there was one highest probability trade right here. No, there was two highest probability trades. Okay. All right. Here on the ES now. Okay. On the ES, here we go. So it started out in here. There was really one trade right in here that you could have taken, and then it got really choppy, and you wouldn't want to trade any of that, and I didn't. The first trade that I did actually do in here on the S was right there. I picked up one tick there, did another one over here, picked up another tick. That was a break even. I picked up a tick there. Then I picked up 10 ticks there. That's where we got the goal for the day. That put us at 12. Then I had a break even there. Looks like I picked up another tick there to put us at 13. Then I had 2 stop outs on the ES that were my fault. This one right here was my fault. I should have had my stop at break even, but I was talking and I wasn't paying attention. It stopped me out, -8 ticks. That put me back down to 5. Okay, I had a break even right here. I probably should have let that ride a little bit, but I was being really fast and talking about risk management and doing it really quickly. I had a break even there, and then I stopped out on this one. Again, this one, we closed up above the MA1. I should have had my stop at break even, and it stopped me out. So 2 examples of why you got to pay attention to your risk management. Then I was talking about risk management at the time. And I messed up both of those and stopped out on both of those. So at that point, we were -3, and we were -3 for a little while till over here. I got it back to break even, picked up 3 ticks there. Then I picked up, I picked up 8 ticks on this one to get me to +8. Then 2 ticks here to get me to +10. 1 tick to get me to +11. Then 6 ticks. It looks like to get me to +17. Then 1 tick to get me to +18. Then I did take one more trade here right at the end, and I picked up 10 ticks on it. I think it was right in here or somewhere in here. I picked up 10 more ticks, but I didn't count it. Then let's see, during the break, highest probability trades. It was one right here, highest probability trade. One right here, highest probability trade. Both of those worked out just fine. So if you waited for just the highest probability trades today, there weren't too many of them, but they were there. And I was able to show everybody, on the crude and on the gold, the trades as they were coming up, and on the DOMs, how everything was coming together and how everything should have been. Like right now on crude, for instance, crude's going to go up to 108.33. 108.33 is where you should see crude at any minute now. And the pullback side of that is going to be down at 108.15. So this is what you're looking at. The chart's suggesting it should go up before it comes down, but because there's a red there on the cycle, it could come down before it goes up. Those are your two numbers right there. Right now it's saying don't do anything until you get an up close. There would have been a long from right back here, would have been a break even at this point. The ES right now is suggesting it's got an area that it wants to get down to. I'll highlight it for you. It's right down here. Right there. There's an area, a group down there that it wants to drop down to. The pullback number on that is going to be right up here. Here is your pullback number. Okay. On the gold, I can't really see all that much on gold, and it's kind of split, but 92 on the downside and 93.6 on the upside. Okay, so this is what you're looking at on the upside and on the downside right there. It's right in the middle. The slingshot is suggesting it's going to go down. The charts are suggesting do not do anything. With the crude, like I was saying, it's got red here in the cycle, and it's already had a pretty good leg up. It should have a pullback. If it does pull back, it should pull back into here and then give a push up. Looks like it's going to just push up first. So there it is, push up first. Now, the push up happened from right here. This would have been a momentum long trade from right here. Okay, right there. There's your push up. Now you should get that pullback. It's actually given something a little closer on the pullback than all the way back here. And on the target side, it's actually gotten much better target now too. The target is up here at 43. It's almost there already, but the target was right up here at 43. It's got another target that it's showing right now above 43, up at 50. It's going to pull back eventually here though. Okay, so these are your pullback numbers here and here still. And 33 is also a pullback number now. But anyway, that's what it looks like. Crude was the highest probability trade setup that we had showing up right here in this little mess. And it did work out and did everything that it should have done. Now the cycle's going down way too steep to go along. So this is the beginning of a cycle reset is what's happening here. So what that suggests is that you're going to get a big leg up and it's going to drag the cycle back up, but not right away. Okay. Yeah, that was a lot of talking. Okay, so no questions in here. That's okay. With that, I am going to go back here to the spreadsheet. Now, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 18th day of April 2022. Today made 18 ticks on the ES. It was the only thing we traded. There were some other nice trades here on gold and on crude, but we only traded the ES, and we're up 225 this morning on the ES. Today it took 33 minutes and 4 trades to get to the goal for the day. At that point, we're up $150 a contract, and we took a total of 16 trades this morning. That put us at $11,050 on the month. So that was over 11 trading days, averaging $1,004 per contract per 2-hour trading day. We've now gone 135 days since our last negative day, and we've gotten the goal on 73 out of 73 possible days this year. And that puts us at $80,958. That is over the year. And on the year, that puts us at $1,109 a contract on the year, averaging 73 bucks. 73 days on the year, averaging $1,109 per contract per 2-hour trading day. If you were to quit trading when you got your goal for the day and you were to add 1 contract a month, so far this year, you would have only had to work 10.56 hours and you would have averaged $2,114 per hour on the year. So if you've not taken a free trial and you want to, go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click that link, we don't know that you took the free trial, so make sure you click on the link. All right, That's it, guys. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Excellent.
And there we go. Recap of the recap.
Today it took 33 minutes and 4 trades to get to $150 per contract.
Good job.
Thank you.
Now, once you earn the right to trade 10 contracts, then that's over $1,000. But
that is right.
You got to take your time. You got to pace yourself. You got to learn the strategy. You got to learn the methodology. And you start out in sim, in the live training room, trading along with Michael and Valerie until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. That's when you go live, and then the 24/20 blueprint will tell you when it's time to add a second contract, a third, or fourth. You only add one at a time, and you only add with profit you earned in the market. If you follow that, it makes it much more difficult to blow up your account again. So, heed those words of wisdom. Okay, Valerie did get me get her data going, and so I do have a logic recap. With most of the world closed, not a lot of alerts. 8 alerts issued, 1 never triggered, 4 waiting, 3 actionable. So far, nothing stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure. And a very simple 3-step process that we teach all of our passport holders. Now, the logic alerts are based on current price action. They come out around the clock. The channel opens for business in Telegram Sunday night at 6 p.m. Eastern when the Globex markets open. But again, many of the markets are closed today. So, once the alert channel opens at 6 p.m. Eastern on Sunday night, it remains open around the clock till Friday afternoon at 5 p.m. Eastern when the global markets close. Now, our original alert service, the concierge trade alerts, that's a little bit different. They're based on historic price action, whereas the logic is based on current. CTAs are based on historic price action. And when historic price action meets current price action, that's where you'll find some of your very best high probability, low risk trade opportunities. So last night we got them out at 6:15 p.m. Eastern. Now when we go to the charts, you'll still see last week's weekly trading zones because the alerts that go out on Sunday night are based on last week's zones. On tomorrow's show, the new zones will be on the charts. We've published the weekly trading zones since December 14th of 2009. Once you understand how to use them as part of the trading strategy, it'll become one of the most valuable tools you have in your trading toolbox. There's 2 numbers for each market. Once this is published, go to the chart of the markets you trade and make note of where price is at this time. Because going forward, if price starts trending up towards 44.18, that's bullish. And so our strategy will look for opportunities to be long the market. If price starts trending down towards 43.61, that's bearish. So our strategy will look for opportunities to be short the market. In both cases, you'll use Logic 247 and everything you learn in the live training room every day to yourself find opportunities to be long or short the market based upon what the chart tells you to do. So you're never just taking a shot. You're never just rolling the dice. It's not a gamble. Every trade is a high probability, low risk trade opportunity. when you follow the rules. So let's go to that daily chart of the S&P. Won't take us long to run through this today. Okay, last night we came down through the 50% fib retracement. We had 3 days we bounced off of it. Or actually we closed right at it, just above it on Friday. But here we bounced up to the step line, red and falling, the BVC. That's all stuff we expect to be resistance, and the 38% retracement. When we opened last night, we came down through the 50% fib retracement, but I alerted everybody in the live or in the discussion group in Telegram to be very much aware of this bullish cross. This creates an area. When we have a bullish cross that leads to an extended move, the first time price revisits that area, it almost always serves as good support. Now, if sellers continue, and if buyers continue not buying, then when price drops below this area, say about 43.37, then there's a real nice trade opportunity down to the 62% fib retracement. Now, we're looking at the last leg up on the daily chart. The low was put in March 15th. The high was put in March 29th. And we've been right at this 50% fib retracement for now 1, 2, 3, 4 trading sessions. We've dipped below it to the bullish cross area. Question now, is that going to be enough support to get us above the step line, above red and falling, above the 38, above the daily BBC? As you can see, the pressure is to the downside. Okay? But keep in mind the 62% fib at 42.19. If we come down through this area highlighted by the rectangle, then the next good support is right there at 42.19. I'm sorry, 43.19. No, yeah, 43.19 and change. I really do need new glasses. Okay, let's take a quick trip through each one of the markets. The S&P opened here last night, the vertical line on the chart. That separates today, Monday, from Friday. And as you can see, the window of opportunity that we drew in on the show Friday filled beautifully. And where did it find support? Exactly where we had drawn the rectangle. If you missed Friday's show, you can go back and watch youtube.com/CFRN. This was just a beautiful opportunity. And then we closed just off the low of the day. So we opened last night, we headed lower, we took out the 50% fib, we got down to that area of the bullish cross, the market found support, we got back up to the weekly trading zone where we consolidated for quite a few hours, up to the BBC, back down to the zone, up to the BBC. We finally get above the BBC. So now we can start thinking about trading on the long side. However, the market never traveled far enough to trigger the long CTA. The short trigger, which first happened right here, the trigger is 43.61, and we dropped to 59.25. So almost 2 points. Then we get back above the trigger, drop again. This time we drop to 43.650. We'll call it 57. That's 4 points, $50 a point, $200 per contract traded. And then we get back above the trigger. We dropped again, but we got above and we dropped, and then we got above and we dropped. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. As you can see, we consolidated here. We got rejected at the CTA. We got rejected at the CTA. We had blue and climbing in the picture. We got above the BBC. We pulled back. The pullback holds more often than it doesn't. Just like this pullback held. This pullback held. And it sent us all the way up to the high of the session, but not high enough to trigger the long CTA. And these wicks here. When you see this, you can anticipate that the market is most likely heading lower. And right now, we're sitting on top of last week's weekly zone at 65/66. Now, our traders get the new zones on their chart first thing Monday morning before Wall Street opens. But you don't throw out the previous week's zones just yet, because they often continue to hold sway over the market until well into Tuesday. Sometimes they even hold sway on certain markets into Wednesday. We got red and falling overhead. If we break this low, if we break this low, that's when we can start thinking about trading down to that 32 or that 62% fib retracement on the daily chart. All right, on the Dow, ran right up to the CTA and got rejected. Price behaves around the CTAs very much the way it behaves around weekly trading zones. Only three things happen at a weekly zone. Most likely is consolidation. The second most likely is rejection. The third and least likely is the slice. There's consolidation. There's rejection. And here's the slice. Now when price slices through a zone like it's not even there, what typically happens is it will retrace back to the zone it sliced through and then continue in the direction of the slice. Now this zone, 34,170/175, that was good support. It sent us up. The pullback held. We attempted a leg to the downside. There was buying pressure in the market at that point in time, and it drove us through this zone, which retraced right back, and we got rejected. Important prices, important areas are almost always tested. So even though this didn't trigger, it got tested. On the Russell, no trigger on the long side. Basically, we got rejected right here. Price did drop. 1985 was the trigger. The low of that candle was 84.60, so it was a couple ticks. But again, the 30-minute is your roadmap. You're using your smaller time frame, whichever one you've chosen, to make sure you have a valid trade setup so that you don't fall into this. Over here we got a nice trigger, and it took us down because this one didn't re-trigger. We went from 1985 down to 1979, the weekly zone, which is the trade to target. On every alert, if it's a long, the final trade to target is the zone overhead. If it's a short, it's the zone below. The zone was 78.79 and the low was 78.90. So from 85 to 79, 6 points, $50 a point, $300 per contract traded. On the NQ, we open, headed down to the zone, never made it to the CTA, caught a bullish cross, made a run, but couldn't quite get to the long CTA. Now we've dropped back below the BBC. All of the markets seem to be folding. We got red and falling in the picture, and so for the NQ, you would look to trade the downside, even if you only traded 725 to 700. That's $500 per contract traded. Okay. In the live training room this morning, they rolled crude to the M contract. So this is the last time you'll see the K contract. And we had no trigger on either side. Price just kind of whipping around a little bit. We could still trigger on the long side, but again, we've already rolled to the M contract, so I'm going to go ahead and do it now so I don't forget later tonight when I'm doing the CTAs. Okay. All right. Next is gold. Gold triggered shortly after the open. And it ran straight to the target from 79 to 90. It's $1,100 per contract traded, and we only got the one trigger. But when we got to the zone overhead, we found resistance. Pulled back, made another run, pulled back to the BVC, made another run, and now even gold is starting to trade below the BVC. If we take out this low, there's going to be windows of opportunity here and down here. Silver. 2 pennies is $100. 2602 was the trigger, and the first trigger took us up to 2621. That's about $900 per contract traded. Price got back below the trigger, triggered again, but this time we got red and falling overhead. We don't want to go long into what is potentially going to be resistance. So here you would wait until price overcame red and falling. Red and falling becomes blue and climbing. And then you could have traded it all the way up to the high of the session. We then pull back to the BVC. The pullback holds more often than not. We caught a bounce, but we got red and falling overhead, putting pressure on the market. So look for price to potentially drop below the BVC. And then once we take out these lows, if that's how it turns out, then that creates a window of opportunity here. And then once we get back below the trigger, expect a potential trigger on the long side. And last but not least, the euro. Market opened right at a weekly zone. We attempted a bounce. Red and falling came into the picture. Then we triggered once, twice, 3 times. On this fourth trigger, well, when it triggered, it was still red and falling. But as you can see, blue and climbing provided support, sent us back up to the weekly zone, where price is consolidating. Now price has dropped back below the trigger from 82.50 down to a low of 79.40. That's what we call not a bad trade. Brings us back to the daily. Remember, this high altitude picture I'm giving you is very important, okay? This support needs to be broken before you get real serious about taking any sizable trades on the short side, okay? All right. If you've not yet become a part of the CFRN family, all you got to do is go to eminifuturestrading.com. Get your lifetime passport, never expires, no upsells, no recurring fees, none of that, okay? It's everything a trader needs, all under one roof, at one low price. We provide you with things nobody else does. A live instructor, 2 hours a day, every trading day, putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it, along with answering your questions. This is how you learn the strategy. This is how you learn to read the indicators, along with 2 hours of live training every trading day. As a passport holder, you have access to unlimited one-on-one mentoring. Our methodology that we teach you, our strategy, works with futures, with stocks, with Forex, with crypto, with options, because all markets, price flows the same, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Doesn't matter if it's the S&P 30-minute, crude oil on the 1 minute, Apple on the daily, Euro on the weekly, Bitcoin on the monthly, price flows the same. Most people will never tell you that because they want to sell you a different course for each market. Okay? Price flows the same across all markets and all time frames. So you'll learn the strategy that will allow you to trade futures, stocks, Forex, crypto. If it's a market, our strategy will work. Our indicator set, it's not just for E-minis. It equally works as well on Apple or Google or the Euro or Bitcoin. As a passport holder, you receive the Logic 247 alerts around the clock. You receive the concierge trade alerts. You have access to the Thursday night members only workshop and so much more. The passport is your all access pass to not only everything we do, but everything we've done since 2008, actually 2005, and all the new stuff we're doing in the future on TradingView. eminifuturestrading.com. We've made the process as simple as possible. If you have questions, call Valerie 949-42-EMINI or send an email to support@cfrn.net. And with that, before this call comes in that I know is coming in, let's get to our good word for the day. Colossians 3:13. Put up with each other. Forgive and bless. Building a successful relationship calls for focusing on other people's strengths instead of their weaknesses. Benjamin Franklin said, keep your eyes wide open before marriage and half shut afterwards. It's a mistake to rush into a lifetime relationship without taking time to get to know the other person. Without due diligence on the front end, you are sure to have problems on the back end. But an important relationship principle lies in learning to forgive and bless. American politician Edward Wallace Hawke is attributed with saying, there is so much good in the worst of us and so much bad in the best of us that it hardly behooves any of us to talk about the rest of us. Blessing can be harder when the offense is great. Small offenses can usually be forgiven quickly. Big ones involve a healing process. But until you decide to forgive and bless, the process can't even start. Paul writes in Colossians 3:12, be gentle, kind, humble, meek, and patient. Put up with each other. Forgive anyone who does you wrong, just as Christ has forgiven you. Love is more important than anything. It is what ties everything together. When it comes to facing facts about situations you can't change, pray for grace and learn to live with them. Why do we need to forgive and bless? Because God says so. You are not designed to carry the physical and mental stress that comes with harboring resentment. Galatians 6:1, watch yourselves, or you also may be tempted. In other words, we need to be careful not to do the same thing we've just found frustrating in someone else. And that's our good word for the day. We'll be back tomorrow with a regular show. All the markets will be open around the world. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.